Okay, we're back to chapter 22, and we're doing example 2. It was a separate file under class notes that I put in because some students have problems kind of figuring out some of the pieces for a statement of cash flow. So just put it on pause and go print it off. If you haven't already, it's under class notes. It's at the very bottom. So here's information regarding ABC Company for year 2020. And only 2 accounts are interested in equipment and accumulated depreciation. We've got 2019, 2020. And what's happened is equipment has decreased by 10,000 and accumulated has increased by 1,000. So here's the things we know. Depreciation expense was 8,000. Okay, it only went up by, so something's different there. There was a loss on sale of equipment, so we must have sold equipment. And we know that was 5,000. We also know equipment was purchased for 20,000 during the year. So I need you to determine which items from the above information belong in the operating and in the investing sections for the statement of cash flows for 2020. So the best thing to do is to analyze the T accounts to figure out what's happening. So I'm just going to start with equipment. And then accumulated depreciation. So we started with equipment, and remember they always list the newest year on the left-hand side. We started with 100,000 in it. We ended with 90,000 in it. Accumulated depreciation, we started with 20,000 in it, and we ended with 22,000. Let's see all the pieces we know. Depreciation expense was 8,000. That means we had 8,000 here for depreciation expense. Loss on, we'll deal with that in a second. Equipment was purchased for 20,000 during the year. That means 20,000 was the purchase. So now we can figure out, so it's missing. We know we sold equipment, we just didn't know how much we sold. So 120 minus 90 is 30,000 was sold. Now remember, when you sell equipment, you close the accumulated depreciation that belongs to it. So 28 minus 22, we've got 6,000 that also relates to the sale. So let's put together the entry for the sale of equipment. So let's put the pieces together, leave space for about 3 debits and a credit. So we sold equipment. Equipment goes out 30. We also know we closed accumulated depreciation for 6,000. We also know there was a loss. So losses are debits. Was 5,000. And now we can figure out how much cash we got. And that is 19,000, just to fill in the blank. So this is the amount that goes under investing as a cash because we're increasing it. So let's just list our sections and see what goes in them. So operating, direct method, Okay, depreciation expense and loss are not cash. So they shouldn't be included in payments to suppliers. So, if they are a separate line item, on the income statement, just ignore. But if they're included as part of another expense account, subtract. Okay, now the investing section. And we already said the sale of investment or of equipment, 19,000, and it's a source of cash. So it's positive. But don't forget, we also purchased equipment for 20,000. And it's negative because it's a use of cash. Okay? So that's how you deal with questions that don't give you all the pieces. So this one didn't. It said, hey, here's equipment, here's accumulated. But you know what? We're not telling you all the pieces. You have to figure out how much was sold and how much got taken out. And sometimes they tell you what was sold. You have to figure out what's purchased. It can change all around. So just get used to doing questions like this. You'll see them in the questions you've done, and you've definitely seen them in 315. Okay, we are going to leave this then, and we're going to go to example 1 on page 6 in the next video. Bye.